Hello traders, and welcome back to the Smart Money Insight. My name is Rain, and today we're going to take a closer look at Philip Morris International, which is a global tobacco giant best known for its Marlboro brand and the recent push towards the smoke-free products. And wow, that's pretty ironic to hear about a smoke-free future coming from one of the largest tobacco companies. So Philip Morris International last reported its earnings just quite recent on 22nd of October. And in their report, the company announced adjusted earnings per share, the EPS of $1.91, which exceeded many analysts' expectation, which is about $1.82. So on the top of this, the revenue of the quarter reached $9.91 billion, reflecting about 8.4% increase compared to the same quarter last year. So on the day, the Philip Morris International reported its earnings on the 22nd October, the stock price rose by about 7.35%, I would say increasing by about $8.75%. So it's reaching to the price of $127.71 during the trading hours. Now, let us explore the factors that drove this surge, and let's see whether the stock has a room to grow more or it's burning out. Now let's take a look at its fundamental, and let's try to understand about why Philip Morris stands out compared to its peers and the broader tobacco industry. Now, when you refer to the earning per share growth here, while for the Philip Morris slightly below the average standard, like 3.92%, which is for its peer is about 4.45%. But you don't have to be overly concerned about this number, because I would say the company still has a very robust outlook by looking at its projected sales growth here. Now, for the Philip Morris, the projected sales growth is 6.37%, and this is way above its peers industry, all right? And this is actually kind of signaling you that the company has a very bright future ahead. Now, talking about profitability, well, I would say the company did very well. Now, let's refer to its net margins, which I would say that it has 12.10%, and then if you compare to its competitors, 11.36% here, then I believe that you can see the company has the ability to convert the sales to profit very efficiently here, all right? And this efficiency, I would say, also reflects very well in the stock performance, with the Philip Morris year-to-date price change by 41.16%, all right? And if you compare, this is actually to show the price increase, and if you compare that with its peers, I would say that's far outperforming its peers, which is about 18.30%, and in the market, comparing to S&P 500, about 21.80%. So I would say Philip Morris is pretty outstanding in terms of the performance, and this also shows that investors or traders clearly have a very strong confidence towards the Philip Morris trajectory and positioning it as a leader in the sectors. Now let's analyze it from its technical perspective. Now, when you look at this Philip Morris chart, all right, today the price is sitting at $132.80, which I would say that it is not just an ordinary number, but it's hitting the highest level of the year, especially when you refer back into the past 50 trading days or 200 trading days. And I would say the price is really high. It's at a peak or at 100 percentile level. So if you plot the 20-day moving average, this will closely follow the short-term trend. And when you apply the 50 and 200 moving average here, it's kind of steadily climbing. So this is showing that the bullish sentiments has been building for months, all right? Now, when you take a closer look here, all right, at this point that the line, the purple line, the 20-day moving average is trying to break below the 50-day moving average, and it is failed. So this is to show you that the stock has its sustained momentum, all right? Now, one interesting point also that you want to take note is going to be over here. There is a small consolidations here. So this consolidation actually shows you a clear indication of a strong momentum throughout 2024. And in order for you to understand this momentum better, let's use or utilizing the trend channel drawing, which I would say going to be very helpful to analyze it. Now, when you look at this chart, it's clearly, I would say there are two very prominent channels and both uptrending. All right, so the first one is going to be the black take color lines here, all right, and the second one is going to be the green color, and very, quite obvious, the green channel showing a greater or steeper momentum here. One thing that you need to understand about how the prices is the price movement, the fluctuation of the price when it follows the trend channel, that the price will try to fluctuate up and down. It's try to, hitting both the resistance and support lines in process to follow its trend. So when you look at the prices here, while it's trying to fluctuate up and down in the black channel, it happens to hit the resistance level of the green channel. And let me circle out for you so you can see it clearer, all right? And because it keeps hitting the resistance line from the green channel, therefore, if you realize that this prices is forming to a what we call a symmetrical triangle. And as you probably know that as a traders, okay, this pattern symmetrical triangle represent the continuity of the trend, which in this context I would say continuity of the uptrend. So starting from here, when it's entering this triangle, the price fluctuating, consolidating up and down, all right, before eventually it break free at this point, push the price upward, it continue to uptrend, all right? I would say that the break happens at this point, or we call it the apex point. So what happened is that when the price is touching both the support of the black channel and the green channel, both are support from these two channels, then the market probably start to realize that, well, apparently that it's hitting the bottom of the two channels, which actually kind of trending upward in nature. So traders is quickly grab and push the price up, all right, and beyond this black channel, all right, testing the first resistance here from the green channel, and eventually it come back down and consolidates, all right. So this consolidation is actually where the buyers and sellers are trying to, to negotiate, all right, try to consolidate whether or not the price right now was kind of overvalued and it should come back joining this black channel, or actually it has very much potential and momentum to surge beyond the black channel and come back to the green channel, to join the green channel, all right? And apparently it did. It come back, join, it surged up, all right? And testing this resistance line at the price around 132 and 133 level of the resistance level, all right? Now, there are two possibilities might happen. First, that if it breaks above this resistance line, means that it's going to form a new high, and we do not know at this time yet what is going to be the new resistance line, right? Or probably that it will come back down and the price will consolidate somewhere around this level, all right? But whatever level, I would say the consolidation going to be in upward trending momentum, all right? Which later on, I would say we will see at what price the market likely to agree to consolidate at the moment, all right? But whatever direction, I would say that the stock right now is really on fire. Now, so let's take a look. Is there any potential smart money came into the stock that can help traders to ride on the upward trend momentum here? All right, and to do that, let's use my proprietary smart money algorithm. We call it Trader GPS system. To use the Trader GPS system to identify the potential smart money coming into the stock, into the picture here, is very simple. We just need to click with one button and it will help traders to calculate the potential possibility for the smart money to join in. So I just try to push back a little bit historically to see where the smart money potentially come into the picture. Okay, and for Philip Morris, now you can see there's an arrow here indicates where the smart money can potentially join on the stock. All right, before eventually there's a consolidation here, probably it's the time to take your profit first. All right, and continuing from 22nd of October here, there is another sign of potential smart money came here. All right, so as you can see from the pattern here, and this is the strong reason why a lot of traders love to join when smart money come to the stock, because that, well, smart money easily move the price up or down the moment that the smart money in or out from the stock. All right, so in this instance, the smart money has been joining into or potentially joining into the stocks, the Philip Morris. So I would say when the smart money came to the picture, usually the trade can be less risky. All right, it means that if there's a drop, well, there is a certain support level to sustain this damage. But when the stock is keep uptrending, then it can be forming a new high. So that is gonna be the behavior of joining the smart money to follow the momentum. All right, now let's take a look at its risk-reward landscape from the option markets. Now let's take a look at its implied volatility small chart. All right, so the blue dot color indicating the put options, and the red dot color here is a call options, with y-axis represents the implied volatility level. The x-axis represents the strike price level. All right, and this at the bottom is the volume of the transactions. Now if you look at the chart here, I would say the more stable and the lower implied volatility across the strike range, right, especially happens around this area. If you look at the price range around 130 to 140 here, so this is suggesting that the confidence is around this price level. All right, and there is a wide jump. There's a wide jump at the price of 120 price level and below. All right, but you also observe that there is no significant volume here, or there's no volume here. So it is suggesting that the downward trend towards this price level is not really anticipated in the markets. And if you compare with the call volume, which is significantly high over here, which is particularly it's concentrating at 140 strike. Okay, so this suggests that it's a very bullish interest here. Okay, so the traders is anticipating a move toward or above this price strike level at 140. All right, now let's take a look at its implied volatility trend chart. Now the one on the left, the y-axis represents the implied volatility, and the x-axis represents the date, and this line represents the implied volatility trend. Now the blue color represents the put options, and the red color represents the call options. Now when you look over this period, all right, somewhere around the beginning the early October and the mid-October here, that the implied volatility level is relatively very high. So this shows that the market is pretty uncertain. All right, so this is coincides with the consolidations that we just talked about. Probably they're thinking, should they push down to the first black channel or push up higher to the green channel? Should it strong enough to go above the black color channel, right? So during the consolidation, a lot of uncertainty, but afterwards, right, you see kind of like the sharp decline. So this sharp decline, so telling you both call option and the put options, there is a reduction in the perceived future volatility. So what this means for traders is that traders will expect a more stable price environment going forward. Now, if you look here, now there's an upward trend coming from the 50-day moving average of implied volatility. It is hinting a slight increase in overall market caution over the medium term, but because in this given context, there's a sharp decline of the implied volatility cross below this 50-day moving average. So I would say that I would anticipate a phase of consolidation or less aggressive price swings in the near future, as you can see that this recent drop in implied volatility might signal that the market stabilization after the previous volatility spikes, but also that you want to take note here that there's a divergence between the short-term and the long-term implied volatility, which suggests that the unexpected events could still lead to a sudden volatility increases. So this divergence shows you that the nature of the stock itself is pretty influenced by probably sentiments right now. It's very sensitive towards the high volatility. All right. Now the things that you also want to take note, let's say over here, when the blue spike go beyond and above the red line here, this indicates that the downside risk is more in the market. While right now, when you observe that the call options, the red color spikes up above the put, all right, so the red is above the blue lines here, this indicates that I would say there is an upward opportunity, or the buying momentum is more right now in the markets. So to wrap up these sessions, we believe that the odds are currently in favor more towards a bullish move, with several key factors aligning to drive the stock price upward. But always remember that we must remain cautious given the existing geopolitical uncertainties, upcoming elections, and the broader financial landscape in the US that could influence the market sentiments. Well, I would say that's all the analysis for the Philip Morris for today. And if you believe that my sharing is useful, I would say please give me a thumbs up, alright, subscribe and click the notification so you won't miss out any good opportunities in the future. And please leave any comment below if you want me to analyze your favorite stocks whenever the opportunity comes, so I can share more smart money insights for you. All right, so see you at the next ones, and trade smart.